Welcome to the InvestSense market commentary for the fourth week of March 2025, and probably a fairly short one because mercifully it was a fairly quiet week. Certainly Europe, emerging markets, they were sort of pretty flat for the week, and actually the US was up a few percent after what's been a fairly volatile month so far. Still down a couple of percent for the month so far, but up almost 4% for the Nasdaq, and the Magnificent Seven up 6%. The economic data has been mixed but fairly quiet. Signs of maybe further signs of slowing economic growth on the manufacturing side, but a bit more activity on services in the US and in Europe. Maybe some positive signs of an industrial expansion, especially in Germany, and maybe sentiment being buoyed by those recent stock market gains over there. But really, a lot of this is the calm before the storm, or so a lot of people feel, ahead of the April 2nd next week so-called reciprocal tariffs that may or may not come into effect. There is a sense that Trump is fairly serious about this, and we will see something. But if we don't, of course, you markets would love that. But most people we talk to aren't making too many predictions. One sign of life, though, was you can see on the chart there that the so-called Magnificent Seven up by 6%, and that seems to be based on retail trading. The chart here we shows courtesy of Goldman Sachs via the Marketeer. You can see that single stocks trading especially has actually accelerated amongst retail investors even as the Nasdaq was falling. So, fun fact for the week, Tesla actually up almost 30%, 27% over the past week, which takes it back to where it was 3 weeks ago, and also the same day that Trump was elected. But that also means that it's still down 40% from its highs at the beginning of the year. That gives you a sense of the degree of volatility associated with some of these stocks, and Tesla in particular, and retail flows seem to be a large part of that. And so for the last 4 years at least, a buy on the dip has been a sort of proven strategy, and there's a thought out there that retail investors in the US, a lot of which are highly leveraged, one-day options, etc., are fairly conditioned to buy on the dip. But institutional investors this year have been leaving the US. Basically, I think there's been about 65 billion net outflows from the US in favor of places like Europe, and so there's a bit of a dichotomy there between what institutional investors are doing and retail investors, and maybe next week we'll find out who's right. In the meantime, we've been talking to Trinetra. We had a conversation with them this morning, and we're going to have a few follow-up calls. We were talking about the thematics, and that's in this week's video, around in particular the Chinese economy, so-called Chinese cool, the pace of innovation over there, and the degree to which the Chinese consumer could actually support a recovery there, and China could end up being a unlikely safe haven. And certainly that's what the market's been saying so far this year, relative stability, while Europe's been up and the US has been on the back foot. And in a similar vein, we've had Andrew Hunt out this week visiting a lot of our clients, and we'll be having a webinar with him on Friday. Still time to join if any of our clients want to join in that conversation. Similar themes to some extent, a lot of uncertainty this year, but also perhaps making a case that outside of the US is where you might find a little bit more stability, although maybe longer term we'll find out which emerging markets are going to be the winners, and maybe by the end of this year we'll know whether we've seen a recession, and whether that might actually lead to a reaction from the US authorities, the Fed and the Trump administration that could unleash a little bit more inflation. So a lot going on, and a pretty interesting presentation from what I've heard so far. So if you want to join that, please feel free to click on the link in the weekly newsletter, and we'll see you on Friday. And otherwise, look forward to talking next week.